Here's why most Canadians get it wrong with reversed mortgages. Okay, so let's clear the air. If you've ever heard that reverse mortgages are a scam or that they're dangerous or that you lose your house, I get it. These stories are out there. These stories have been floating around for decades, but here's the thing. They're wrong, at least here in Canada. Today I'm going to break down where those fears came from, why they don't apply to Canada, and what you actually need to know about reverse mortgages in Canada. First, a little bit about myself. My name is Peter Fabry. I've been a mortgage broker since 1999. I'm the founder of Rewind Mortgage, a reverse mortgage information site, which is a division of my licensed brokerage. And you can find all the licensing numbers for every province in the details section of the main page. I specialize in helping Canadians 55 and older and younger navigate no payment mortgages, such as reverse mortgages and other no payment mortgage options. This channel is all about honest, pressure-free education. If that sounds good to you, please hit the subscribe button. Now let's dive in. Let's start at the beginning. Most of the fears around reverse mortgages come from what happened in the United States decades ago. In fact, we're talking about primarily from the Great Depression of 1929 and up until the time of Ronald Reagan. That's where the horror stories come from the United States, where some people with some lenders in some states lost their homes. They were charged skyrocketing fees by shady lenders. Back then, the reverse mortgage landscape in the United States was a bit of the Wild West. Few regulations and no consumer protections and not a lot of transparency. And let's put even today's lending landscape in the United States in perspective. There are so many lenders in the United States. When I did thesis work comparing the Bank Act of Canada to the financial system of the United States, I was appalled to find out that over 1,500 lenders and financial institutions in the United States every year go bankrupt. Now think of that compared to Canada, where we've got our big six banks. It's a very stable financial system. And not only that, we've got a very tight regulatory system. So all of the reverse mortgage lenders in Canada are highly regulated by the Canadian government. In fact, there's regulations around how you can even call yourself a reverse mortgage lender, and we're going to come to that. So these horror stories that come from the United States, it gives you an idea when we're talking about Ronald Reagan, how long ago that was. But not only that, the mortgages that we're talking about were actually set up differently. They're essentially what's called life estates. You literally at one time would sign over the deed of your home. You'd be allowed to live there until you passed away, and then that was it. These types of mortgages have never existed in Canada, or if they have, it's been a very long time, and it's certainly not with respect to reverse mortgages. And there's strict federal regulation to make sure this doesn't happen here. Reverse mortgages in Canada are responsibly designed so that you always maintain ownership of your home and your equity always remains yours or your heirs. They're also designed with the intent that the equity gets preserved and not eroded over time. That's why reverse mortgage lenders will never lend more than 55% of the value of their home. They're very cognizant of what interest rates are, what the interest rate accrual will likely be if you make no payments, to make sure that your equity gets preserved. But these stories, they're stuck. They get filtered into Canadian gossip, news even, repeated at the dinner table. Even though our system is completely different, the stigma still lingers. But that's really changed in recent times, with literally tens of thousands of people turning to reverse mortgages as a viable retirement planning tool, not a last resort. Many people are entering retirement age with debt or mortgages and looking for solutions. If you've got 1 in 3 Canadians, soon to be 1 in 2, entering retirement at age 65 with a mortgage, and the thought of selling and moving to another city or province or a condo, God forbid, it just doesn't seem that appealing. People are looking for solutions. You can't keep having a mortgage payment when you're on a fixed pension where all your money is going to mortgage and you've got nothing left to live on. So people are looking for solutions, and a lot of them have found them. This product has transformed the lives of the people that understand the product and have decided it's right for them. So here's the truth about reverse mortgages in Canada. We've got one of the most highly regulated financial systems in the world. Reverse mortgages are overseen by the same national banking regulators that oversee all the traditional banks. Lenders are required to make sure that you get independent legal advice so that you understand what you're signing, you're not under any undue pressure, and things have been properly explained to you, hopefully for a second time. You get written disclosures, there's an independent appraisal, and no one is slipping the paperwork under the door at midnight to you. Right up front, you will receive schedules that will show you how your mortgage will grow and an estimate based on 15 years of Canadian Real Estate Association data to show you how your equity is likely to be preserved and or growing over time. They want to make sure that you understand not only what your mortgage looks like today, but what it will look like tomorrow. The whole point of this mortgage, the process, the regulations are to give you peace of mind and improve your quality of life, not to trick you into something. Let's face it, if reverse mortgage lenders were getting away with some kind of scam, how long would they be in business for? And Canada's oldest reverse mortgage company, which is owned by the pension fund for one of Canada's largest public sector employees. Of course, they're not going to be sticking their neck out trying to scam people, right? What does all this mean? It means that when the house is eventually sold, your house, either by you or your estate, you will never owe more than the house is worth, period. And that's if you don't make any payments. You are allowed to make interest payments if you wish. You are allowed to make principal payments if you wish, but you don't have to. It's optional. Even if the housing market drops, even if you live to 105, even if interest rates go bananas, that risk, it's all on the lender, not on you. Now let's talk about ownership again, because again, a lot of people still somehow believe that as soon as you get a reverse mortgage, the bank owns your home. It's just not true. With a reverse mortgage in Canada, you remain on title, you still own your home, exactly the same way if you had any other type of mortgage, which if you're entering retirement with a mortgage, it's the same thing. You own your home, there's a lien against the house for the loan, which at some point has to be paid. Only with a regular mortgage, you have to make payments. With a reverse mortgage, it's up to you. You can sell your home anytime. You can refinance anytime. You can make a penalty-free payment every year. You can make optional interest payments monthly if you wish. You can pay out the reverse mortgage and get a regular mortgage. You can switch lenders just like you would be able to if you had any other type of mortgage. You can pass this home on to your kids. The reverse mortgage is simply paid out like any other mortgage would be when the home is eventually sold. So why do people still get scared? Well, honestly, it's because of the thought of dealing directly with a bank or a lender, I believe. People know that banks and other financial institutions want to sell you something. We've all had those phone calls at the dinner table from someone at a bank trying to sell you a credit card or an insurance policy or something else. When you talk to a bank, you always have to wonder if you're hearing the whole story, or maybe you'll get sold on some product that isn't quite right for you because the lender or bank makes a good buck off that particular product. I even got scammed recently. I have a Visa card, I have a MasterCard, I have one of these credit monitoring services where they tell you whether your credit score is stable or gone up or gone down, or whether it gives you a warning if someone tries to take out credit in your name. So I got an email that says, you're approved for an American Express card. Well, I have two brothers that live in the United States. I remember being in one particular state and I was with my wife and we were traveling, and wherever I was, they took American Express and something called a diner's card, but they didn't have Visa or MasterCard. So I thought, well, I'll get this American Express card. Why not? Well, I haven't used the card yet. My first bill comes, $12.95 charge. I thought it was a one-time yearly fee. Second month comes up, another $12.95 charge. It turns out that I'd been sold some kind of a card where I wasn't even using it, and I was paying every month. It wasn't the right card for me. A no-fee American Express card, but that's not what I was offered. So again, when people are dealing with financial institutions directly, they often have to wonder, am I being sold a product that's right for them or right for me? And that's where a mortgage broker comes in. And this is where I get really passionate about helping people get it right. Mortgage brokers are just like lawyers in the sense that we represent you, not the lender. We provide unbiased advice on what your options are. We take the time to thoroughly understand your needs and circumstances, and it's our job to try to find the most suitable solution for you, whichever lender has the right product for you. And you have to understand that we're paid by the lender just like any other commission salesperson, just the same as their own commission salespeople are paid. Pretty much all institutional lenders in Canada pay us the same commission that they would pay their own employees, only we get to decide which is the right product for you. So I'm really indifferent as a broker where your mortgage goes, as long as it's the right product for you, because somebody's going to pay me. Unless it's a private mortgage, it's irrelevant to me. The next thing you have to understand is that there's more than one reverse mortgage company in Canada, and they all have the same continuing lifetime guarantee, but their products differ. Maybe they have different interest rates. Maybe one lends more money than the other based on your postal code. Maybe the penalties are different. Maybe the upfront setup fees with one is greater than the other one, but the penalties to get out of it are less. These are things that you can't possibly know unless you start delving into and spending a ton of time doing it, and you still might get it wrong. Now, when you go straight to one of the reverse mortgage lenders in Canada, of course they're going to show you their products, and that's all they can show you. That's it. They might offer you a great product, but how would you know? How would you know if it's the best product for you or the right product? They're not going to tell you. They're not going to tell you that their competitor has a better product, and they probably wouldn't even know. And further, as a mortgage broker for 25 years, who has specialized in alternative lending for the 1 in 3 Canadians that do not qualify for a bank mortgage, yet they might have a great profile, great income but self-employed, great credit but self-employed, whatever. The point is that there's a lot of Canadians that qualify for great mortgages at institutions other than banks. I may be aware of another product that's actually better for you and more suitable than a reverse mortgage, and I'll be the first one to tell you. Don't get me wrong, I love reverse mortgages. I think they're great. I really do. But because I'm bound to work for you and for your benefit, not the lenders, I'm going to tell you what I think is the best fit for your particular needs and circumstances. I want to walk you through the pros and cons of each lender and each product. We'll look at which one fits your goals better, whether you're looking at a lump sum, a monthly draw, or something in between. And here's the important part, truly. You don't pay me anything ever to arrange a reverse mortgage for you. It got paid by the lender. That's the industry norm. In fact, charging a broker fee for arranging a reverse mortgage is prohibited. You get unbiased advice, look at your options, and someone is in your corner making sure it fits your situation. This is the part that most people don't realize. The wrong reverse mortgage product can actually cause a lot of problems and a lot of money down the road. Let's say you go direct, you get locked into one of the lender's reverse mortgages, and 2 years later you want to flip to a different product like a HELOC or a different reverse mortgage lender, whatever. Some of the lender contracts make it very expensive to break early, so you should be really thinking about working with someone that's looking beyond today's transaction, thinking what your needs are in a year, 2 years, 3 years, 5 years, making sure that you've got a plan and you're choosing a product that's appropriate for that plan. So let's recap here. Reverse mortgages are great products, but not perfect for everyone. One thing for sure they are not are the villains that they have been made out to be in the past. They're financial tools, just like a mortgage, a line of credit, an RSP, or a pension, and when used properly, they can unlock a better retirement, relieve stress, and help you stay in the home you love. I've had clients use reverse mortgages to pay off debt so they can breathe again, renovate for safety so they can age in place but be safe and comfortable, delay CPP so that their monthly payouts later are larger, help adult children with a down payment so they can get into the housing market, especially right now in 2025 when house prices are down 25%. Today is a great time to buy if you've got cash. You can cover unexpected medical costs without draining investments. Let's wrap it all up. The biggest myth, that reverse mortgages are dangerous. It's ridiculous. The truth, in Canada, they're highly regulated, transparent, and they offer real protection for homeowners. The second myth, that they're expensive. The truth, well, compared to selling, paying realtor fees, downsizing, drawing from your RSPs, taking a tax hit, they can be much more cost-effective than other options. So to have a closed mind to this is essentially opening yourself up to the risk of spending too much money on something that isn't the right solution for you. The third myth, that you only have one option. The truth, that's only true if you go to one reverse mortgage lender. When you work with a broker, you get choice. strategy, and someone looking out for you long term. If you've been carrying around a fear or judgment about reverse mortgages, maybe it's time you put that weight down. Times have changed. The products have changed, the regulations have changed, and for the right person, a reverse mortgage might just be the best financial decision they've ever made. Don't forget to hit subscribe if you found this video helpful. Stay tuned for the next one. You can find more information at rewindmortgage.ca or leave a message in the comments and I will be sure to get back to you. Thank you again for watching, and I hope to see you again soon.